Imagine waking up, gasping for air, in a sheer panic, maybe 10 times an hour, every single night.
Mm-hmm.
Your brain senses this terrifying drop in oxygen, hits the emergency alarm, floods your whole system with adrenaline, and, well, it basically forces you to subconsciously wake up just to take a breath.
Right. It's an exhausting, hidden nightmare. And it's actually the reality for nearly 1 billion people worldwide.
Which is just a mind-blowing number. So today, we are looking at how solving that exact biological crisis turned one hardware manufacturer into, frankly, a $5 billion data titan.
It is a profound transformation. We're really pulling back the curtain on Resmed Incorporated today, specifically dissecting their massive Form 10K annual report for the fiscal year ending June 30th, 2025.
Yeah.
And this isn't just a story about medical devices. It is a masterclass in systemizing a highly fragmented healthcare market.
I'm Jack, and our mission today for this deep dive is to unpack that exact evolution. We are going to explore the physical hardware they build, the invisible software ecosystem they've deployed to capture the market, and the absolute financial surge they experienced between 2024 and 2025.
Exactly.
We're looking for the mechanisms behind those numbers. Because, whether you're looking at business models or just want to understand the future of digital health, there are some serious aha moments here about the business of sleep.
And I'm Misha. To understand how Resmed generates over $5 billion in revenue, you really have to start with the sheer scale of the medical condition they are targeting, which is obstructive sleep apnea, or OSA.
Right, OSA?
Yeah. The numbers in this 2025 report are almost hard to process. They estimate 936 million people globally suffer from mild to severe OSA.
Wow.
Yet less than 20% of sufferers are actually diagnosed in the U.S., and it is less than 10% in other global markets.
That is an unbelievable total addressable market, simply walking around undiagnosed, chronically exhausted, and unknowingly compounding their risks for hypertension, heart disease, and type 2 diabetes.
Mm-hmm.
Because, when you enter deep sleep, the muscles in your upper airway naturally relax. For someone with a narrow airway, that relaxation causes the tissue to just collapse entirely.
Which brings us to the historical fix, dating back to the early 1980s. The medical industry developed continuous positive airway pressure, or CPAP.
Right, the CPAP machine.
Yeah. And the Resmed report uses this highly descriptive term for it, a pneumatic splint.
A pneumatic splint.
Exactly. It's basically an air generator that blows a precise amount of room air through a mask to physically hold the throat tissue open using nothing but air pressure.
See, but that sounds incredibly invasive.
Yeah.
And when I look at their current flagship platform, the AirSense 11, the report highlights touchscreens, over-the-air software updates, and proprietary AI algorithms.
Oh, yeah.
So, wait, I'm looking at these features. Are we sure they aren't just slapping an iPad on a medical ventilator to justify a premium price tag? Like, does an app actually stop my airway from collapsing?
It's a totally fair skepticism. The pure physics of the pneumatic splint haven't changed fundamentally, but the mechanism of delivering that therapy has. And it solves the single biggest hurdle in sleep medicine, which is patient compliance.
Oh, because people just don't want to use them.
Right. Sleeping with a mask strapped to your face, having pressurized air forced into your nasal cavity is inherently unnatural. Early generations of CPAP felt like sticking your head out the window of a moving car.
Oh, man, yeah.
Patients hated them. They took the masks off in the middle of the night and literally shoved the machines in the closet.
Right, because a perfectly engineered medical device is completely useless if the patient refuses to plug it in.
Precisely. So the technology you're questioning, the AI algorithms and the software, is designed entirely to manipulate the comfort and habituation of the therapy. The AirSense device isn't just blowing a static column of air anymore.
Oh.
The algorithms monitor the patient's breathing, breath by breath. When the patient is awake, the pressure is barely perceptible.
Oh, that's smart.
Yeah, and as the device senses the transition into deeper sleep stages, where the airway actually becomes vulnerable, it micro-adjusts the pressure upward. It is actively managing the therapy so the patient doesn't feel overwhelmed.
So the algorithm is essentially acting as an invisible respiratory therapist sitting next to the bed, just adjusting the dials in real time.
Exactly.
And that brings in the myAir app mentioned in the report. They are pushing this companion app that gives the user a daily sleep score based on the previous night's data points. It gamifies the therapy. It provides automated coaching.
And the clinical outcomes of that gamification are undeniable. Studies cited in the 10K show that continuing positive airway pressure therapy increases an OSA patient's chance of survival by 39% over a 3-year period.
Wow, 39%.
Yeah. By making the device smart enough to be comfortable and engaging enough to actually form a habit, the technology literally saves lives.
And their hardware portfolio extends beyond just that bedside unit, too. The report details the Air Mini, which is currently the smallest portable CPAP on the market, built for travel. Then you have the heavy-duty life support and ventilation products. They build the Astral, the Stellar, and the AirCurve series.
Right, for the really severe cases.
Exactly. These are complex devices for patients dealing with chronic obstructive pulmonary disease, or COPD, and severe neuromuscular diseases.
And we also have to look at the physical interfaces. The masks themselves, like the AirFit and AirTouch lines, represent millions of dollars in continuous R&D.
Yeah, because comfort is everything there.
Totally. They are engineering these masks to be as minimalist and lightweight as physically possible to reduce facial marking and claustrophobia. But there is another piece of hardware introduced in April 2025 that completely shifts their dynamic: the Night Owl.
The disposable home sleep test.
Yes. It is a portable, cloud-connected diagnostic sensor that the patient uses at home and then simply throws away. And understanding the Night Owl is really the key to understanding Resmed's transition from a hardware manufacturer to a logistics powerhouse.
Let's follow that thread, actually, because making a phenomenal CPAP machine or a disposable diagnostic sensor only matters if you can get it into the hands of the patient.
Right.
And looking at their distribution model, this is not a scenario where a consumer walks into an electronics store and pulls an AirSense 11 off the shelf.
No, not at all. The medical device distribution channel is a highly complex B2B2C model. Resmed generally does not sell directly to the end user. Their primary customers are home medical equipment providers, sleep clinics, and hospitals.
And the landscape of that system is famously convoluted. Like, normally, a primary care doctor identifies the fatigue, refers the patient to an entirely separate sleep lab. The lab conducts an overnight study. A different doctor interprets the data.
It's exhausting just talking about it.
Right. And then a prescription is written and sent to an independent equipment provider. And that provider has to battle the commercial insurance company or Medicare for reimbursement.
Exactly.
It is a maze of misaligned incentives where clinics operate in complete silos, data gets lost, patients get frustrated by the wait times, and simply abandon the process.
And that fragmentation is the absolute enemy of Resmed's bottom line. Every time a patient drops out of that maze, Resmed loses a hardware sale. So their strategy, which is mapped out extensively in the 10K, is their residential care software segment.
Okay, so software is the fix.
Yes. Resmed operates a massive SaaS business. They have acquired and integrated platforms like Brightree, MatrixCare, and MetaFoxDan.
And these aren't just minor companion apps, right? These are enterprise-level software solutions that handle electronic medical records, complex insurance billing, and operational analytics specifically for those home medical equipment providers, home health agencies, and skilled nursing facilities.
Huge scale.
Yeah, the report states these platforms support over 160 million individual patient accounts.
They are essentially providing the digital plumbing for the entire out-of-hospital care industry. And in May 2025, they made a strategic acquisition that perfectly capped off this infrastructure. They acquired a company called Virtuox.
Virtuox, and they're an independent diagnostic testing facility, right?
Exactly. Meaning they facilitate the in-home testing for sleep and respiratory conditions, and they actually bill the commercial and governmental insurance payers directly for that testing.
Oh, wow. Now put the pieces together.
Yeah.
Resmed provides the disposable Night Owl diagnostic test. They own the Virtuox infrastructure that administers the test and bills the insurance. They own the Brightree software that the equipment provider uses to manage the patient's prescription and fulfill the order. And of course, they manufacture the physical AirSense machine the patient eventually receives, along with the app the patient uses every morning to check their sleep score.
So it's an intentional, inescapable funnel. By building or buying the software that connects all those broken healthcare silos, they are systematically removing the friction from the diagnostic process.
Right.
They ensure that once a patient enters the top of the funnel with a bad night's sleep, the prescription at the bottom of the funnel is almost guaranteed to be written for a Resmed machine. They haven't just built a better product, they've paved the exact road the patient drives on to get it.
That is the definition of an end-to-end strategy. And controlling that entire funnel creates an absolute fortress around their revenue, which brings us to the financial results for the 2025 fiscal year. The numbers are just staggering.
Oh, let's get into the numbers.
Let's look at the income statement. The top line, the total net revenue hit $5.146 billion. That is a 10% increase from 2024, driven directly by higher global demand for their devices and their masks.
Right.
10% growth for a company of this size is a massive achievement. But the metric that really demands attention is the bottom line profit. While their revenue grew 10%, their net income skyrocketed by 37% to $1.4 billion.
Yeah, it's what?
That works out to $9.51 per share. So I have to ask, how does profit grow almost 4 times faster than top-line revenue? What is the mechanism there?
It is a textbook case of gross margin expansion. Their gross margin jumped from 56.7% in 2024 to 59.4% in 2025. And, in the physical manufacturing world, expanding your margin by nearly 3 full percentage points is incredibly difficult.
Yeah, the report mentions better procurement, manufacturing, and logistics efficiencies. But what does better procurement actually mean for a medical device company in 2025?
It means they have fully moved past the catastrophic supply chain shocks of the early 2020s. By streamlining the internal components, like the microchips used across the entire AirSense line, they aren't forced to pay extortionate spot market prices just to keep the assembly lines moving.
Oh, that makes sense.
Yeah, and when you combine normalized component costs with economies of scale selling more units through that frictionless software funnel we discussed, your fixed manufacturing costs spread out over a larger volume of products.
Yeah.
Every incremental machine sold becomes vastly more profitable.
But the profit jump wasn't just about what they did right in 2025, right? It was also about the baggage they finally left behind in 2024. If 2024 was Resmed running a marathon with a heavy backpack full of safety recall expenses and high-interest debt, 2025 was them dropping the backpack and sprinting.
I love that analogy, and that technical debt was substantial. In 2024, Resmed absorbed a $14.3 million hit for field safety notifications.
Ouch.
Right? They had to account for the costs of providing alternative masks to patients due to updated medical contraindications regarding the magnets used in certain mask clips. They also had to physically replace specific components in a subset of their astral ventilation devices.
A lot of out-of-pocket fixes.
Exactly. In 2025, those recall and replacement expenses completely vanished from the income statement, which instantly lifted their profitability.
There was also a fascinating detail buried in their debt structure. Yeah. In 2024, Resmed paid nearly $46 million in net interest expenses just to service their debt. But in 2025, they aggressively paid down the revolving credit facility. Because they reduced that debt and started earning higher interest on their massive cash balances, they flipped the script entirely.
It's a huge shift.
They didn't pay any net interest in 2025. They actually made about $4 million in net interest income. That is a $50 million positive swing straight to the bottom line, simply from better treasury management.
It really is a pristine balance sheet. However, a deep dive into a 10K requires looking at the risk factors, and Resmed meticulously documents the external forces that could disrupt this momentum. They operate in a highly dynamic, globally exposed environment.
Oh, for sure.
For example, the report highlights significant supply chain inflation risks tied to global trade policies, specifically referencing new tariff measures introduced in February 2025.
Right, because they manufacture components everywhere. They have facilities in Singapore, Australia, Malaysia, California, China, and France. Any reciprocal tariffs or trade wars instantly create friction in that perfectly tuned procurement engine.
Precisely. Furthermore, they note a highly specific policy shift proposed by the Department of Veterans Affairs.
Oh, yeah, the VA policy.
Right. Currently, the VA grants an automatic 50% disability rating for veterans who simply have a documented need for a CPAP machine.
Okay.
The VA has proposed modifying this rule. Under the new proposal, merely needing the machine would only qualify a veteran for a 10% rating. The 50% rating would be strictly reserved for patients whose sleep apnea remains ineffective even with treatment.
Okay, let me contextualize that for a second. If a veteran loses that significant disability compensation just because the CPAP machine is effectively doing its job, the financial incentive to seek out a diagnosis or maintain the therapy drops dramatically. Resmed is noting that a single administrative rule change in one government agency could actively suppress device demand among a massive demographic of patients.
It perfectly illustrates how intertwined medical device manufacturing is with government policy. We're just reporting what's in the 10K here, but it's a huge potential headwind. But to survive those exact supply chain shocks and VA policy changes, a company needs an incredible financial safety net.
And looking at their cash flow statement, Resmed has built exactly that.
Oh, absolutely.
Let's examine the raw cash generation. In 2025, Resmed generated nearly $2 billion in operating cash flow. To be precise, $1.75 billion. That is pure cash generated from their core operations, which even included a $124 million bump from tax refunds and interest.
Yeah, that's massive.
Put yourself in the shoes of an executive team for a minute. You have 10,600 employees globally, you maintain complex physical factories, and you run server farms for 160 million patient accounts. When you generate that much surplus cash, how do you deploy it?
Well, we look at their financing activities for the clearest signal. They deployed over $600 million toward financing activities, and a massive chunk of that was dedicated exclusively to rewarding their shareholders.
Yeah, they spent $300 million buying back their own stock, which is double their buyback spend from 2024. And they paid out over $310 million in cash dividends. They generated basically $2 billion in cash and effectively handed $600 million right back to the owners of the company.
And even after heavily funding operations, spending $200 million on investing activities like acquiring companies such as Virtuox and rewarding shareholders, they ended the 2025 fiscal year sitting on a war chest of over $1.2 billion in cash and cash equivalents.
So in a volatile economic environment, holding over $1 billion in cash means you aren't at the mercy of the credit markets. You are a predator, not prey.
Hello.
What does that capital allow them to do strategically?
It funds relentless innovation. In the digital health space, you are in a permanent race against obsolescence. Consumer technology giants are desperately trying to integrate medical-grade sleep tracking and apnea detection into smartwatches and wearable rings.
Oh, true. Everyone's got a sleep tracker now.
Right. To maintain their moat, Resmed poured over $331 million purely into research and development in 2025. That cash war chest allows them to self-fund that R&D, absorb geopolitical tariff shocks, and aggressively acquire more software infrastructure without ever having to borrow expensive money at high interest rates.
It is a completely self-sustaining engine. We started this deep dive looking at a biological crisis, hundreds of millions of people whose airways collapse while they sleep, destroying their health. We've seen how Resmed engineers sophisticated AI-driven physical splints to physically force that airway open. But the real revelation in this 2025 report is the invisible infrastructure. They built a closed-loop B2B2C ecosystem of diagnostic sensors, billing software, and patient apps that captures the user and removes the friction of a broken healthcare system.
They systematically converted the messy, analog process of sleep medicine into a streamlined, highly profitable digital pipeline. And they achieved a $1.4 billion net income year by shedding the technical debts of past product recalls and hyper-optimizing their manufacturing scale.
But before we wrap up this analysis, there is a larger, almost philosophical question that emerges from these data points.
Oh, definitely.
The 10K explicitly states that Resmed currently has over 30 million patients continually monitored on their cloud-connected AirView platform and over 10 million patients actively registered on their MyAir app.
Just think about the sheer volume of that information. That is, millions of human beings uploading highly intimate breath-by-breath respiratory patterns night after night into a centralized corporate database.
Yeah.
It is arguably one of the largest continuous physiological data sets in human history.
Exactly. As artificial intelligence models become increasingly sophisticated at predicting our long-term health, our cardiovascular risks, and our neurological decline based on these exact types of sleep patterns, who really owns the future of our healthcare?
That's the real question.
Is it the local doctor who interprets the chart? Is it the patient who generates the physical data every time they close their eyes? Or is it the sprawling tech titan that holds the algorithmic keys to billions of hours of human sleep?
The hardware might be keeping the patient alive today, but that proprietary data is the architecture for the future of global medicine.
Something to ponder before you go to bed tonight, and let your own breathing slip into that automatic biological default. Thank you for joining us on this deep dive into Resmed's incredible evolution. Keep exploring, keep questioning, and as always, keep learning.